Okay, simple payroll management. That's the name. Simple payroll management. Okay. When we talk about payroll is the way we manage the staff pay, the staff salary that we pay to our staff. That's called payroll. And in most cases, our payrolls are managed using Excel. Most of the payroll are managed using Microsoft Excel. Let me see, I think I have a payroll template here. Okay, so let's talk about payroll. Payroll is actually what we pay, is the list of the staff we pay or how we make payment to them on a monthly or wherever however we are paying our staff. For example, there are some basic things that we should have on our payroll. And in most companies, salary are just paid like they pay with hands, they pay with whatever. There's no proper record of keeping payrolls really in most companies, especially in the small businesses. And this is a very important, is one of the very important things that even if you have anything to do with maybe tax with the state government, one of the interested area is actually your payroll, because they are expecting, they know there's a certain amount that you have to pay to government. And this is a very cheap something to do, because what government expects is actually it is called pay as you hand, which means that if somebody hand small money, it's going to pay small amount of money to government. Why most people think they are running away from PAYE is because they think it will add additional burden to them. However, this is not true. This is not true. The additional the pay you are paying to government is actually deducted from the salary of the staff. And on the other hand, most small businesses who have staff, for example, I think since 2020 or so, those staff that earn less than 30,000 naira and below are exempted from paying PAYE. So which means that if you still have your structured payroll and those people are on the list, you are not paying anything on them, and when government comes, nobody will give you any liability to be paid on them. So only people who are earning more than this will pay, and the pay is actually to be deducted from their salary. Now, how do we do that? Let's say we have the serial number. Let's say this is our payroll template. Just have a small payroll template here. Let's merge it as one, and put the name to be BMC Limited Payroll. So how do we do this? So in most cases, your payroll are computed on an annual basis. Now, let's say we have employee, we have serial number, we have name, and we have designation. Then we have I think that's our department or whatsoever. We can have department. Then we have their payment breakdown. Let's say we have the gross pay to be this. This gross pay is broken down into different headings. So we can have like a basic salary, housing salary, transport, and it depends on the companies. Medical, wardrobe allowance, leave allowance, all those things are there. It depends on companies how they structure it. Now, but what we're learning here is how to help to do it for our business in case we have our business, or how to help small businesses to do so if you are going to work for small businesses and as a data entry expert. So we have this gross pay, we have basic, we have housing, we have transport, we have medical, we have leave. And so let's leave that there. Then we have some other statutory deductions, like what do you call it? Like pension scheme, pension NHF. Then that's all. Then if anyone of them have maybe life insurance, life assurance or something like that. So we have all this. I think that's all for now. That's all for now. So let's quickly see how we are going to prepare the payroll in a minute. We have employee number one. His designation is the CEO. Let's call him CEO. The department is admin or operation, wherever we like to put him, and is on like a 3 million salary or 5 million annual salary. Let's say 3 million annual salary. So this is the gross pay of this man. Now, the basic, it varies from company to companies. Some company can make it like 40, 20, that's 60, right? Can make it like 15, that's 55. We have 3 left. 55 can make it 15, 15, 15 too. Let's see, 15, 15, and 15. Does it give us 100? Okay, 120. Let's make this one 10, 5. Just for the purpose of the training. 5%, 5%. So in some cases, in many companies, what you have to do is just click because of this, multiply by this, divided by 100. Remember, during our class, we talk about absolute reference when we're talking about Excel. That's F4. In case you're going to copy this down, so it's going to be like that. And at the same time, even this also, this E4 too, the gross pay, the E4 has to be in F4, but not okay, F4 too. Let's leave it like that and then move on. So if you copy this now, I think it should give us what we want. Oh, why? Where is this 40 over this? Okay. Okay. The fixed has to do with just the column, the row only. This row 2. So we are going to relax the F. So let's copy. Let me recopy it again now. So okay, I think this is good now. So we have this 120, 600. So this is the breakdown of this man's salary per annum. The breakdown is this is the breakdown of his salary per annum. Then we have pension, contributory pension. Before now, the next thing we're supposed to prepare here is actually the consolidated relief. Before, I think like 2 years ago, what we have is consolidated relief allowance. Consolidated relief allowance. That's an allowance given by government to everybody that want to pay tax or payee. It's a relief for everybody. Control V. Which will be, it will be just like be equals to 200,000 plus 10%. Is it 10%? Any account there? 10% of the gross. Something like this. 10% plus this. No. Plus 10% of this. Ten times this, okay, sorry, 10%. 10% of this. So this is the relief the government is granting this person. That government is aware that he's going to feed his family, he's going to transport to work, he has dependent relative, he has this. Before 2014 or so, we used to 2014 or so, we used to have child allowance, family allowance, relative allowance, dependent relative, all those ones, 5,000, 4,000. No, I think it's Obasanjo time. It's a Wiada. It's Okonjo Wiada. It was during the Okonjo Wiada that they changed it to CRF. They package all relief the government is granting everybody into this small relief. So, which means that whoever is earning this much will benefit 500,000 tax free. But now, during I think 2 years ago, government discovered that they are going to give you pension relief again, which means that you are going to enjoy two relief on this consolidated allowance. Then what they now do is that they now remove this and they make sure that it is after you deduct pension now that you're going to charge your CRF. So what we are doing now is you have your pension contribution, which is 8%. And this is also very good for if you have company. Most of our staff, when they leave companies, there is nothing. Most companies does not have capacity to pay them any gratuity. In most cases, most small companies don't have capacity to pay gratuity, or are not even interested in paying gratuity. So in that case, we should encourage. If our own business, let's ensure we introduce them to pension. We pay on their behalf. This contributory pension is different from the whole pension where people go and queue and die while waiting for their money. No. And this is one of the good things that the former president, Obasanjo, did for Nigeria. You get it now? So, it's a contributory pension that whereby the employee, the staff, will pay 8%. 8%. And the company that is working for will pay 10%. So these are the percentage. 80% of the salary of this amount is going to his account every year. This amount, 18% of this 3 million is going to the account every year. So if a staff work for 10 years, that means 80% of 30 million will have been remitted into his account, assuming there is no increment in the salary for the period. So 80% of 30 million will have been remitted into the salary, and this will have been invested by the pension administration, and the return will have been added to his money, which means that if he has contributed like 1 million, he will have had like 3 million by the end of 10 years, or 2.5 million by the end of 10 years, which if he's collecting salary, he cannot save up to that amount. You get it now? So it's very important. We should encourage our people to do that, or our friends or whoever have business around us. Let them imbibe the culture of paying pension for their staff. This is something they will benefit from when they leave that job, or maybe somebody resigned or whatever. For the next 3 or 4 months, there is a lot of stories on that. So we're not be able to go deep into pension for now. So pension by the law of the Pension Reform Act of 2014. Before 2014, it used to be 7.5% of BHT, these three. It used to be 7.5% of these three only. That's what your employer will deduct from your salary, and they will add the same 7.5% from same. But I think 2014, that was during the time of President Jonathan. So it was changed to 8 and 10. And the clause here has changed, that it has to be on the gross pay, but the gross pay must not be less than the BHT. It has to be on what? On gross pay. So it's going to be 8%, 8% of gross, but must not less than. That is a clause when they are interpreting the law, but must not be less than what? Than the addition of these three. So if you say your gross pay is less than these three, it will be null and void under the law. Am I making sense at all? Hello? Hello?
Yes.
Okay.
It's okay, you can go ahead.
Okay. Sakande, Abdraman, am I communicating? So,
Yes, I'm with you.
okay, so I don't want to go into too many grammar, but because we are doing something basic, so we have to explain some things there. So with this now, we have this ready, and the next thing is what? We do our CRA rather, consolidated relief allowance, which is going to be what? Equals to 20% multiplied by gross minus this. Remember that the new law does not allow you to charge it on the gross again, but it has to be on the gross less the pension relief, because your government see that they have already relieved your pension. So if you didn't remove pension, you're going to enjoy the relief twice. That's one thing that I think the Zimbabwe, the current NAMI, the current whatever, the NAMI, I think, has discovered from the secret of from what the citizens are enjoying, and they block that avenue. So 20% of this plus whatever you get here. Let me close this bracket so that we don't it doesn't confuse. This 20% of this, everything here plus I think 200,000. Yeah. So which means that this person is going to enjoy this current relief allowance. You're going to enjoy this at the end of the year. This is what you're going to enjoy during the end of the year. Let me see the formula. Is it okay? Okay, this minus this. Good. So this pension will leave now, and NHF, National Housing Fund. I think even now, I think the government has relaxed the rule that it's no longer compulsory for, I think, small businesses again. No, it's not compulsory for small businesses. I think it's 1%. It's 1% of the salary. So 1% of the salary. Let me put it up here. 1% of the salary that goes into that 0.01 multiplied by this. Multiplied by this. Sorry, what is this? I've done something wrong. 1% there. Okay. Now, if the owner, as a business owner of business, if there is a life insurance whatsoever for him, do this. So these three are deductions. These three are what? They are deductions. You are going to remove these three before they charge you any tax. Deductions. Now, here we now have, let me remove this. If we ask that, we had it to deductions. Now, what we have now is taxable income now. This is the income that government can tax now. This is what they want to tax. That's the reason why they call it pay as you earn. Some people, before they reach here, the money they have will not even up to 100,000 again. You get it? That's those who have who are on a low pay. So taxable income now is equals to this minus the total deductions. Sum of this. You sum these three together and you remove it from the total. So this is what government wants tax now. You want to pay tax on this one. And how are you going to pay tax? The first 300,000 from this 1.37 now, the first 300,000 of this money, 300,000 of this money, they're going to pay like I think 7%. Please let me check. Let me Google the rate. I can't remember if I know the rate again. The next one we have 300,000 again. Here you're going to pay I think 11%. The 11% of the next 300,000. Then the next 500,000. I think that is 14% or so. I will confirm this. 14% of this of the 300,000. The first 300,000 is going to be 7% of 300,000. Some people, if at this point his own salary is 260,000, it means that he only pays 7% and there's nothing to charge him on here again. He will not pay anything again on this higher scale. So in this scale, in the case of this man now, can see that by the time this man reach here, the next 500,000, I think it's 19,000, 19% or so. You can see that even his own money, I think it's at 1.6 million. Okay, you can see go. So the next one is 1.6 million. The next 1.6 million, they're going to charge 21% on it. And anyone above, anything that is left above 3.2 million, 3,200 this. Anything above 3.2 million, they're going to charge 24% or so. So this is the rate we can check. I think you can Google the rate online and they confirm the rate here directly by ourselves. I can't guarantee that I still remember the rate very well, but I think something closer to this. So with this, by the time you now calculate, for example, for this man now, let's calculate it as going to look like. Let me copy this and put it up here. Control C. Control C. Let's paste it here. Control V. So equals to this taxable income multiplied by this. You're going to pay this. So it's going to pay this. Oh, sorry. Since it's the first 300,000 only, it's going to be equals to this times 300,000. That's how tax is being computed. So the next 300,000 for people who earn more than 300, if your taxable income is more than 300,000, you're going to suffer from this one too. So you're going to pay 11% multiplied by 300,000 again. In the case of this one earn 1.7 million or 1.9 million taxable income. So the next 500,000 now, they're going to charge 15% on it, or 14% equals to this multiplied by 14%. Then we have the same thing here. Control R. This is going to be 90% on 500,000. And this guy, I think his own money will end here. So after this, if you remove this from 1.9, I think it remains only 397,000. 378,000 now is left. So you will now pay 21%. 21% times 378,000. Which means that is the taxable income is not up to 3.2 million. So you only pay the remaining, what is left here is going to pay the tax on it here. So which means that the tax is expected to pay per annum is sum of this, sum of all this, and close the bracket. 298,000 is going to pay this amount out of his 3 million annual salary. So this is what employer is going to divide into 12. That means we're paying this divided by 12 every month, 24,000 every month. And his own payroll is going to be divided into 12 also. So it will pay 12 divided by 12 of this every month. And but all this one will not be showing or will not be shown on his payroll. This tax is not this computation will not be shown on his payroll. Somebody earn 260,000. He will only pay equals to 7% times 260 if this is the taxable income. Somebody earn 450. That means he's going to suffer 300,000 here equals to this times this, and his balance is what? 150. So you're going to pay 11% of that 150. 11% times 150,000. That's all. So you will not suffer anything outside this. So this is what he's paying in the whole year, and this guy is going to pay this amount for the whole year too. So that's how to prepare payroll. So any question on that? So to prepare the monthly whatsoever, go to another sheet. Something you can just divide all this by 12, create the table, copy the entire whatsoever. Let's say we have something like this. No, we don't need all this again. Control C. Then you come here. Control V. Then we have the designation, we have whatsoever, and these are C okay. So here we have, I'm going to remove the gross pay from here this time around. So it's going to be equals to this divided by 12. That is going to be is the salary. And let's copy this to the right, up to the leaf, Control R. So this is going to be is a gross salary. Gross will be here. Gross monthly equals to sum of all this. Add all this together and close the bracket. So which means his monthly salary is actually 250,000. So his pension now is what? This pension here is going to contribute this divided by 12. It's going to contribute this NHF divided by 12. So sorry, NHF divided by 12. Okay, so which means that is total, and the payee now is payee. You're going to pay as you earn. The payee will what we computed here is going to be deducted. This monthly payee will be deducted from a salary. So we have total deduction. This is the gross pay. This is a total deduction. No, we don't need this. We don't need CRA again. So we have total deduction to be here. Which should be equals to sum of this and this. So it's net pay. What the guy is taking home now is what? Equals to this minus this. So his monthly pay is this. Why this one will be remitted into his pension account? This one will pay into NHF account. This one is this is what he has contributed to Nigerian government or to the betterment of the people of Nigeria every month. He has to contribute his own portion of whatever to Nigerian government. So and so we have net pay to be this start deduction here, and it's net pay to be here. This is his own net pay every month. He will go home with from 250,000, he's going to go with 202,000 cash. Why this one is going to get them later? You're going to get this one later, and this one you can use this one to get some housing loan if that works. I don't know really. So that's how to prepare payroll. If you have 10 staff or whatever, you have to prepare their payroll and get it done. If you want to do it for yourself, something you can do. Want to do for people, you do it for them and charge you a token. For them, you're able to manage their payroll on a monthly basis and remit all the payroll to the government. So are we okay with this? So we can move to the pay slip aspect of it.